Let's begin by turning our attention to the White House props department and that giant chart Trump used to reveal the so-called reciprocal tariffs. The first column was allegedly the tariffs imposed on the US, 67% from China, 39% from the EU, 90% from Vietnam, and so on. Where do these figures come from, and are they in any way reliable?
I'm going to start at the end there. No, they're not in any way reliable. When that poster was held up in the press conference last night, I found myself going up to my television, taking a photograph of the screen so I could look at the numbers in detail. And just as an aside, this is the first time I've ever tried to work out the global economic outlook looking at a photo of my television I've taken on my phone. That's sort of where we were.
We're in a strange world.
Yeah, those numbers were really hard to understand. Now, what the administration has spent the last 2 months saying they're doing is saying they're going to go around the world, they're going to look at the tariffs and non-tariff barriers charged on US firms, taking into account not just tariffs, but product regulations and VAT rates and all of this sort of stuff.
So our hostility to chlorine-washed chicken, for instance, would be treated as a tariff.
And they were going to come up with a number. That's what they told us they were going to do. And I think that's pretty much what Donald Trump said they had done during the press conference. It became apparent soon afterwards that is not what they've done. What they've done is, for every country in the world, they've applied a really quite strange formula, dividing imports from a country by total trade deficits with a country, come up with a number, said that's what we think the reciprocal tariff rate is, and then charged half of it. And you can see this if you look at the EU and the UK. The UK is getting a 10% tariff, the EU is getting 20%. The EU and the UK charge essentially the same tariffs on the United States.
We call it VAT.
Yes. So it's, these numbers, I mean, what you've basically got is you've got a 10% so-called baseline tariff on pretty much all imports. You've got some specifically higher tariffs on things like cars, on things like steel and aluminium we already knew about. And then you've got on top these sort of staggeringly high, in some cases, reciprocal tariffs. Countries like Vietnam, China, these are unbelievably high numbers.
And we, for instance, are on a small trade deficit with the US.
We do.
So how can we be screwing them over in any way if they're doing the same to us, but more so?
Yes, exactly. I mean, this is because of the 10% minimum. So no country has been charged less than 10%, no matter what their formula says.
And just sticking with this slightly sort of agonized, head-scratching atmosphere for a moment, how can it be that we are any problem to the United States, where if you look around this room or any social gathering in the UK, they have so heavily interpenetrated our economy and our culture. We carry American devices in our pockets, our smartphones. We use American-driven technology of all kinds, more and more controversial at the moment. America is absolutely wrapping itself around us.
Absolutely. And, it's important to say, these numbers Donald Trump was talking about were only about the goods trade. And America does run a deficit in goods, but it is a big service exporter, which are not counted in these numbers. But you're right, you step back. Donald Trump last night said for decades other countries have been pillaging and raping the American economy and American consumers. But this is an economy which has performed outstandingly well relative to other rich countries.
It's pretty clear that Donald Trump has been an enthusiast for tariffs from an early age. And indeed, I was talking to somebody who used to work with him, Fiona Hill, in the first administration. Even back then, he described himself as tariff man. He used to say, I'm tariff man. And he has this kind of gold-tinted view of America, the golden age, the period when because America used to have pretty high tariffs, didn't it, in the 19th century?
Had very high tariffs, late 19th, early 20th century, yes.
And Trump looks back on that as the good old days.
He does. Back to sort of the 1890s, President Taft, President McKinley, early 20th century, high tariffs, strong America is how he sees it.
Okay, isn't he a bit right? In the sense that was when America started to build up her industrial capacity in a serious way to challenge Germany, to challenge Japan, to challenge the British Empire as it then was. And therefore, in a sense, that period of a high tariff wall worked for America.
Well, this is certainly the Donald Trump argument that America was growing the fastest relative to other countries when tariffs were high. Now, I think there's two sort of problems with that. Firstly, the work of economic historians who've gone back and looked at the numbers think there were all sorts of reasons why the American economy was growing so fast in the late 19th century. A surplus of land, rising population, and they think tariffs were actually probably a drag. Growth would have been even faster without them. But even if that's wrong, global trade in the 2020s is very different to global trade in the 1880s, 1890s.
And America is the great behemoth squatting over most of the world economy, not China, but everywhere else.
Yes, we're in a very different world.
So how much do you think that the drama of what we've seen this week is really driven by Donald Trump's envy of and fear of China?
I think there's certainly a lot of that. China, the tariff charged on Chinese imports is going to be above 50% now. That is a huge, huge number. I think it is partially driven by this fear that America is falling behind. I think Donald Trump's logic, I think Donald Trump and the people around him accept that tariffs, the sudden imposition of these new taxes on imports at these high levels is going to cause economic disruption. There's no way it can't. He would argue in 4 or 5 years' time, maybe, now it being Donald Trump, he'll say 6, 12 months, but in 4 or 5 years' time, okay, to avoid these tariffs, there will be more manufacturing in the United States.
That's certainly the J.D. Vance view. Reshore American manufacturing, bring the smoking chimneys back to the Rust Belt.
Yes, it is, but you've really got to question some of this. So, take really basic goods, take T-shirts or trainers. There's going to be a huge tariff on Vietnam now. 50% of the trainers Nike sell in the US are made in Vietnam. They're going to become a lot more expensive because of these tariffs. It's worth asking yourself, why does the administration want to bring T-shirt manufacturing back to the United States? Because that's the logic of their argument. They're being ripped off by buying T-shirts from abroad. You can make T-shirts in America. They'll be a bit more expensive. But it's not just that it'll mean more expensive T-shirts for consumers, which is not a good thing. It's that you're going to have to deploy economic resources into T-shirt manufacturing.
We're going straight back to Adam Smith here, I think.
we absolutely are.
Quote from Donald Trump: "The tariffs will not be fully reciprocal. I could have done that, yes, but it would have been tough for a lot of countries." Now, most are being charged approximately half of what they charge the US, he says. Do you think that is a coded way of accepting that his own figures are dodgy?
I think it definitely is. And the average tariff the EU charges on American imports, tariff, not non-tariff barriers, is around 2.5–3%. He's gone to 20 and describing this as a kind, measured action.
Let us be parochial and talk a bit about Britain. We are getting a 10% baseline tariff rate compared to 20% in the EU. Is that good news for us?
It's relatively good news. The emphasis is on the relative here, and I think we should be careful with that 10% number because it's a 10% tariff on the UK, but on steel and aluminium, it's 25%. We export quite a bit of steel to America. And on automobiles, it's 25%. And we export quite a few cars to America.
So the nightmare faced by the luxury car makers like Bentley and Aston Martin and Land Rover and so forth, that is a nightmare.
Yeah.
And that's going to cost jobs in the UK.
It is. And those tariffs are now in force. The automobile ones went into force last night.
Apart from steel, apart from cars, what are the other sectors most affected?
So pharmaceuticals is the other really big one, exporting to America. And, so yes, Britain has got away with a lower tariff than the EU or than Japan. And that is a relative win for the UK. On the other hand, when we're looking at the impact of these tariffs on the UK, they come in sort of 2 rounds. There's the direct impact, and the direct impact on us, on the tariffs charged on our exports, is a bit lower than it could have been. But there's also this huge second round effect. There's disruption of the global trading system. There's going to be a big hit to the European Union, which is our most important trading partner. And I think the indirect impact, the second round effects, are going to be a much bigger deal for the British economy than the first round.
Now, not surprisingly, Downing Street has reacted with relief and a slight pat of itself on the back over all of this. The strategy of keeping calm, staying close to Donald Trump, being nice to him, giving him the state visit, etc. That seems to have worked, they're saying. But of course, an awful lot depends upon what kind of trade deal they can then negotiate with Trump in the weeks and months ahead. What's your understanding of the upside and downside of what they're trying to do?
When on one level, the upside for the UK is getting tariffs back to zero. From 10%. So sort of the upside is getting back to where we were last week. The upside is back to where we were at the start of January. It's not, a new win On top of that, it's going back to the start. What will the US want in return is the question. I mean, they almost certainly are going to go for the digital services tax that the UK has introduced on sort of big tech firms. They don't seem to like the online safety bill because of how it affects American firms. It's lots of little changes they might want.
So this is the really big political question to me, which is how much does the US use the tariff weapon to interfere in our domestic life and our domestic politics? Because, the digital service tax is a fair tax. It's a reasonable tax. British consumers' attitudes to hormone-treated beef or chlorine-washed chicken might be scientifically irrational, or they might be rational, but they're certainly deeply rooted. It's part of who we are. We had the State Department intervening in the case of a woman who held up a sign outside an abortion clinic in Bournemouth. In other words, on the culture war side, they are pushing very, very hard. And there comes a point when you say, if all of that is the case, and if we're going to lose steel jobs, and if we're going to lose automobile jobs, and if we're going to lose whiskey jobs, is it really worth it?
Yeah, I think that's the question. I think it's not just the question for Britain. I think the way to think about these tariffs, I think that is helpful, is there is now this 10% baseline. And I think he's going to struggle to go below that 10% baseline. But, in the case of the EU or Japan, he might be prepared to say, look, you're at 20% or you're at 24%. I'm prepared to come down towards 10 if you give me these wins. And I think, it's a transaction. I mean, the problem is this is a very, very hard administration to deal with. They are transactional, but they're not just transactional, they're uncertain. So if you make a deal today, who knows what happens in 6 months' time? So,
Duncan, let me put to you, in that case, the alternative idea, which was something the Liberal Democrat leader Ed Davey and many more have been saying, which is, let's pretend the United States doesn't exist. Let's turn our backs on them and create our own new free trade area involving Australia, Canada, the EU and other countries. What is the economic outlook for something like that, even if it could be done politically, which I don't think it could be?
I mean, the US is not a huge market for Britain. It's an important market for services. For goods, it's about 60 or 70 billion pounds. That is significant, and these tariffs are going to hurt and cost jobs. I agree with the general principle that no matter whether or not countries are retaliating against the United States, it is important that countries keep trading with each other. And I think that's the big. So, there was a lot of talk yesterday. This is the biggest increase in US tariffs since the early 1930s, since the Smoot-Hawley tariffs that some people blame on the Great Depression. The difference is, in the 1930s, the US whacked up its tariff level, and so did other countries at the same time against each other. That's the sort of spiral that's got to be avoided now.
So it's very interesting. Would it be possible, I wonder, and this might be politically possible in this situation, for the EU to cut tariff and non-tariff barriers to the UK, but also to Canada, to Australia and to other countries?
I mean, it's certainly possible. It's certainly possible. It's politically, it's very difficult, I think, but it's certainly possible. I mean, this debate on retaliation against America is an interesting one because, instinctively, when you're hit by tariffs, what the public want is you to be responding, to be retaliating. Now, tariffs hurt your own country. These tariffs are going to hurt America. They're going to make goods more expensive for American firms and American consumers. Retaliating hurts your own economy. If we retaliate against America with tariffs, we are making American goods more expensive for British firms. We're punching
ourselves in the face, really. So far, how have the markets been reacting to the Trump tariff news?
Not very well, is the short answer. If you were watching US futures, the US markets were closed when Donald Trump did his press conference last night. If you were watching the futures market, it just goes down in a straight line when he starts talking about the actual tariff numbers. Very rough in Asian markets overnight, and this morning, European stock markets, British stock market down 1.5%, 2%. So, markets are not at all happy, as you might expect with these tariffs.
But it's not a vertiginous plunge so far.
It's not a vertiginous plunge, no, because I think there's still. I mean, it's fascinating. Okay, so for the second half of 2024, Wall Street was obsessed with what it called its Trump trade. The idea that Donald Trump, if elected, was basically going to do everything they liked. Deregulation, low taxes, and be quite restrained on the stuff they weren't so keen on. And this would mean the dollar would be soaring, US stocks would be rising. That hasn't really played out. He's not done very much in terms of deregulation and tax cuts. He's done an awful lot in terms of tariffs, but still, there is this sense that surely he can't really mean it. that he's going to pull back. That's how markets are still playing this. They're upset. They're nervous. They're starting to price in the real chance of a recession, but they still don't really believe there's going to be a 50% plus tariff on China.
And yet we have these grandiose Trump promises still in front of us. From the point of view of American voters, he's going to raise so much revenue from tariffs that he's going to cut, slash, or even abolish other forms of taxation. And at the same time, he's going to create new industries right across America. Is it economically possible to do both?
No, it's not. I mean, this is the problem. It's not. And it's slightly wonky point, but an important one. In the last day, the US dollar has been weakening. Now, almost every forecast of what would happen under these tariffs assumed the dollar would strengthen. They assumed America would put in place tariffs, it would do less trade, there'd be less imports, and the dollar would rise. And the rising value of the dollar would slightly offset the impact of some of these tariffs. Now, what's actually happened is he's gone for a tariff policy so large, so much larger than the markets expected, they've been rattled and the dollar is falling. If you have these tariffs and a falling dollar rather than a rising one, the hit to American consumers is higher. Inflation rises faster, and the Federal Reserve, the American central bank, is left in this awful position of the economy is slowing and disrupted, but because price growth is high, they can't cut interest rates. So, it may be because he's done a lot more than the markets were expecting, he's made the trade-offs in the US economy a lot worse in the short run.
And he's going to make the politics much harder in the short run in the US economy as well, perhaps. But you raised there something, Duncan, that absolutely fascinates me, which is the status of the dollar, as the world's reserve currency. Do you think that is now under threat?
I do. And, saying that, it might sound like an easy thing to say, but saying that would have sounded completely crazy at any point in the last 15, 20, 30 years. But it's not, and it's not just me saying it. You've got serious players in the markets. You've got, Deutsche Bank have started speculating, is the safe haven value of the dollar under threat? This is all something radically new. And the dollar, we talk about a global financial system. It's really a dollar system, which everyone else plays in. If the reserve value of the dollar is under threat, if when central banks around the world and sovereign wealth funds are looking, where do we want to hold our ultimate safe reserves? If they're thinking maybe it's not the dollar, that is a big change in the global system. And
also leads to the immediate question: where is it then? Is it the renminbi, for instance?
I mean, it's your better bet is probably the euro. It's in that the renminbi is the currency of China, 20-25% of global GDP, but capital markets are quite closed. It's hard to move it around, whereas the euro is a freely floating currency, freely movable currency.
And this is a slightly more abstract thought, but if the dollar ceases to be the world's reserve currency, isn't that an enormous blow to American prestige and soft power around the world as well?
It's a major blow to American prestige and soft power, and it's a major blow to American hard power. The ability to enforce economic sanctions and financial sanctions around the world relies on them controlling the dollar. If the dollar is no longer the reserve currency, US financial sanctions become less powerful. And the dollar being the world's reserve currency means the US has been able to borrow pretty much as much as it wants at reasonably low interest rates because people need dollars. If the dollar is no longer the single global reserve currency, then presumably US borrowing costs start to rise as well.
This all started from American domestic politics, but before we get too apocalyptic, American domestic politics might sort it out as well. We've got midterm elections coming. Everyone in America can read the polls and hear what's being said at town hall meetings. So we'll watch for that. One slightly strange element last night, however, Duncan, no tariffs for Russia.
No tariffs for Russia. Now, the argument from the United States Trade Representative is that Russia is subject to sanctions, so there is no trade with Russia. So Russia and Belarus were missed off. Now, in reality, there is a bit of trade, that $5 billion worth.
And in your judgment, is there any wriggle room in all of this? I mean, we've been talking as if it's a done deal. It sounded like very much a done deal. This is a day in America's history that it will be remembered for centuries and all the rest of it. That's it. world, you now know what I think, says Mr. Tariff Man. But is there room for further negotiation in all of this?
I mean, there probably is. I mean, I think Donald Trump is going to not want to go below this 10%. And before Liberation Day, if we're calling it that, average US tariffs were about 2.5%. So and as of this morning, the average is about 24%. So it's 10 times as high as it was. I think there may be wiggle room to go back down to 10 or 15, but we'll see. The problem he's got, though, is he wants the revenue from these tariffs to pay for tax cuts. And he sort of wants it both ways. He says that the tariffs are going to keep out imports, but also raise a lot of money. And they will do one or the other.
We can just about both remember the OPEC price shock. We can remember the pandemic, of course. We can remember the financial crash. Is this the single biggest political or the economic moment for the world since the Second World War?
It is certainly the biggest economic moment for the global economy since the Second World War that has been done by choice. So, the pandemic, bolt from the blue, financial crisis, dot-com crash, these sorts of things were big economic shocks. This is the first economic shock
that
by
was deliberate.
Choice. Yes.